Deutsche Bank's forecast for the euro area recovery. Gilles Moec joins us now. Good to have you on the show. Why post-Christmas, I already said it, why post-crisis blues? For whom?
Actually, for most of European countries with a special interest in the peripherals, but really what we have in mind for next year is a situation in which, yes, you have a recovery, yes, GDP is firmly back into positive territory, but we would be clearly south of where we were in terms of potential growth before the recession started. In a way, the recession left some deep scars on Europe, with quite a distinction between what would happen in core EUROLAND and what would happen in the periphery. In core EUROLAND, before the recession, it was pretty hard to find any major sign of financial imbalance in the private or in the public sector.
Core EUROLAND, you're talking that France, Germany?
France, Germany, Italy also, because the private sector in Italy totally escaped the kind of leveraging spree that we had in the periphery. So basically in core EUROLAND, it's a little bit back to business with some scars from the recession. In the periphery, it's the need for an entire new growth model, and this usually takes a lot of time. There are huge transitory costs when you go from one growth model to another, one which would be less reliant on debt, and this will, for a long time, we think, weigh on average growth in the euro area.
Let's single out specific countries in the periphery. Obviously Spain, springs to mind Greece, Portugal,
yes.
Ireland.
Spain is the biggest. Spain for us is one of the biggest concerns in terms of macro analysis, not in terms of financial stability. That's another matter. But Spain is about 10% of the Eurozone. It's a large country. It used to contribute quite significantly to the acceleration in growth that we had just before the recession started. Almost all of it was based on more debt, especially in the household sector, but also in the corporate sector. We will have to live the next 5-6 years maybe with Spain, again 10% of the Eurozone, growing very timidly with possibly another year in negative territory. In terms of weighted average, we're losing a country which used to contribute heavily to the average, which used to have a trend growth of about 4%, which reached 5% at some years, and which will now decelerate for quite a long time, probably south of 2%.
And then obviously there's a special case of Greece.
Yes.
Very, very big storm among investors about the sovereign debt issue. And Moody said last week this is going to be an issue for many AAA rated countries for the next year.
Actually, that's for us a big part of the story for 2010, 2011. It's just the idea that in 2009 we avoided a complete collapse in economic activity before we got, because we got extremely serious in terms of monetary and fiscal stimulus. This fiscal stimulus will have to be paid for, not just in Greece, not just in the periphery, but everywhere. So our picture for the second half of next year would be a situation in which in every country in the Eurozone there would be either implementation or announcement of a quite drastic fiscal consolidation. And past experience shows us that it's usually having a negative impact on domestic demand, so nothing too spectacular in terms of momentum in the second half of next year.
One final very quick positive word?
Well, in a way, unemployment. That's the very big positive in all this. Okay. Unemployment did not rise that much, and in terms of perceptions for people is what matters.
Excellent. Thank you so much, Gilles Moec, there from Deutsche Bank.